Forex, crypto, indices, gold. What do you trade? With so many different assets available, it can be difficult to know which one to trade. Knowing what assets fits your trading style got me from losing a lot of trades to becoming consistently profitable with payouts. In this video, I'm going to walk you through a step-by-step process on how to identify the best asset classes to trade. To do this, first we're going over what Forex pairs are. Then, using this foundation, I'll walk you through the majors, minors, and exotic pairs, simplifying on what pairs you can use to make the easiest money. And after that, I'll walk you through the other asset classes like crypto and the metals. So let's get into it.
Before we dive into the pairs and the asset classes, let's do a small recap of the past two videos. By now, you should be able to understand and explain what candlesticks are and what timeframes are and how to use them. You need to know how to read them, how to trade them. You need to know how to apply the basic and intermediate level patterns. And you need to be able to apply the entry model given in the first episode of this beginner bootcamp. For timeframes, you need to know what timeframes are, how you can use them with the framework of the rule of three. You need to know what type of trader you want to be and how that aligns with the timeframes you need to use. And you need to know how to refine sniper entries using the rule of three and using the rule of three in combination with those important levels. So in this video, we're going to talk about Forex pairs. First, we're going over what are those. So in this video, we're going to talk about Forex pairs and other asset classes. First, we're going over what Forex pairs are. Then we're going over the majors, the minors, and the exotic pairs. And the third important question you need to ask yourself is, what pairs should I trade? Last, we're going over the other asset classes you can trade. Let's start with the basics. What are Forex pairs? A Forex pair is the exchange rate between two different currencies. In Forex trading, all currencies are traded in pairs because when you buy one currency, you are simultaneously selling other currency. In Forex trading, all currencies are traded in pairs because when you buy one currency, you are simultaneously selling another currency. And in this example on the right, let's say you're trading the euro dollar, so the euro against the dollar. The first one, the euro, we are buying that. Simultaneously, we're going to sell the dollar. We call the first currency that's on the pair, we call it the base pair. We call it the base currency. And the second one in line, we call it the quote currency. So for example, the euro dollar is currently worth 1.1000. That means you would need $1.10, the quote currency, to buy 1 euro, the base currency. When you're actually trading, you actually don't need these kind of detailed textbook explanations about pairs, but because this is a beginner bootcamp, I want you to have every single detail needed before you dive into the charts and actually going to trade these pairs. So again, euro is the base pair, dollar is the quote pair. If you're going to trade the dollar against the Swiss franc, for example, then the dollar is the base pair and the Swiss franc is going to be the quote currency. When you're, for example, going to trade the dollar against the Swiss franc, then the dollar is going to be the base currency and the Swiss franc is going to be the quote currency. So then you're buying dollar and selling Swiss franc, but more on that later. Let's build on this foundation. If one of the individual currencies goes up or down, this will have effect on the pair itself. So for example, if the euro goes up and the dollar goes down, so the base currency goes up and the quote currency goes down, that means because you're buying the euro and selling the euro dollar will go up. It's vice versa. If the dollar vice versa, when the euro goes down and the dollar goes up, then euro dollar goes down because the base currency goes down, the quote currency goes up, then the pair goes down. But what if you have a situation where both euro and dollar go the same way? So both up or both down. Then euro dollar will be in a consolidation. That means it's going to trade sideways. It doesn't do anything. And these kind of scenarios you don't want to trade because there's not much money to be made. Most of the money is made in those big expansion moves up or down. So it's always best to have one currency that goes up and one currency that goes down or vice versa. And if you notice the pair you want to trade has two currencies that move in the same direction, like this example, you should avoid trading the pair because it's going to be low probability and you're probably not going to make a lot of money. Now, when you know what Forex pairs are, you know about the base currency, you know about the quote currency. Let's talk about all the different currencies and all the different pairs and how you can categorize them. You have majors, you have minors, and you have exotics. Let's start with the major currencies. The major currencies are the currencies that are the biggest and are traded the most. And in this order is the US dollar, euro, Japanese yen, British pound, Swiss franc, Canadian dollar, Australian dollar, New Zealand dollar. And if you're going to talk about majors in pairs, we're going to talk about majors, minors, and exotics. Major pairs are the most commonly traded currency pairs. A quick side note, you can just remember that all the major pairs are the ones that are tied to the US dollar. These currency pairs typically have high liquidity, tight spreads, and average volatility volatility. And these three conditions make these pairs very nice to trade, because with high liquidity, there is lots of movement in the market. And these three conditions make the pairs nice to trade. So here on the right side, you see the different major pairs: Euro US dollar, Pound dollar, USD GSF, USD JPY, Japanese yen, USD CAD, AUD USD, and NZD USD. And this is how they are traded. So for example, maybe you noticed already, in most of the major pairs, the US dollar is the quote currency: Euro US dollar, GP US dollar, AUD US dollar, NZD US dollar. But in these three, the USD is not the quote currency, but the base currency. It doesn't influence how you trade, but it's good to know that, for example, GSF US dollar doesn't exist. So in this pair, US dollar is always the base currency. You cannot turn this around. So these are the majors. Then let's talk about the minors and the exotics. Minor currency pairs and exotic currency pairs have lower liquidity, wider spreads, and higher volatility. That makes these pairs still good to trade, but the majors just move cleaner and better. What you can remember from this is every non-USD pair can be labeled as a minor. Here you see no USD currency. You have the euro against the pound against the Japanese yen, pound against the Swiss franc. So the non-USD pairs are the minors. And then lastly, the exotics. Currency pairs is a term used to describe the trading of a developing economy's currency with a major currency. Right here, Hong Kong, Singapore, South Africa, and the list goes on and on. Exotic pairs are always also nice to trade, but keep in mind the exotic pairs are more difficult to trade. They are developing currencies. The developing economy's currency can either be the base or the quote currency. So now you know what a Forex pair is and how you can read them with the base and the quote currency. You know what the majors are, you know what the minors are, you know what the exotic pairs are. Then the question is like, okay, from all those pairs you've seen, like in the last 3 slides, you've seen like over 20 or 30 pairs. Which one of the whole list should you trade? And let's go over some ground rules here. The 6 pairs on the right amount to over 60% of the total Forex trading volume. So these are the most popular. And for newer traders, I would recommend to just stick to these 6. Euro US dollar is by far the biggest. US JPY is also very liquid, very big. These 2 are the biggest. GU, so GP US dollar, AUD US dollar, US GSF, and USD CAD. Keep in mind that each currency pair has its unique characteristics, benefits, and drawbacks. And you can compare this, for example, with your spouse. So, for example, you are trading the euro dollar the most and you're dating this pair and you have a nice connection and you develop a relationship with euro US dollar. And just like you develop a relationship with your spouse, with your partner, you know when your partner is in a bad mood. You know when your partner is in a good mood. You know, if your partner talks a certain way that you know, okay, there's trouble coming up, or maybe your partner's in a good mood. And you can see the same when you're trading pairs a lot. So if you have some months or years of experience with euro US dollar, you're going to see the unique characteristics. You know the benefits. You know when they trade, when it trades very nice. You know when to avoid trading euro US dollar. And the same goes for every pair. And here in this example, euro US dollar is the most liquid currency pair and has tight spreads, making an ideal pair for beginner traders. So I would say if you're a beginner trader, start with euro US dollar and with USD JPY and then expand to the other 6. And then a little extra here, where not many people are talking about, is the importance of time in your trading. Because you trade the Forex market, and that means currencies are traded when the specific market is open. So this is an example with the times when you are living in Europe. So for example, you live in London. And what's important to know is that at 8 a.m., so in the morning of London, the London Stock Exchange and the German Stock Exchange, the Amsterdam Stock Exchange, the biggest stock exchange from Europe, all are open at this time. Around the open, there's the most volatility. So that means trading in the London session, we call that, where all the European exchanges are open, is very nice for the European-based pair. So the euro US dollar, the GBP US dollar, for example, the USD Swiss franc. Swiss franc is also Europe. And for example, in New York, what pairs could be nice, or what currencies to trade can be nice in New York? For example, the US dollar, the Canadian dollar. And if you live in Asia or you want to trade the Asian session, when all the Asian stock exchanges are open, so for example, the from Japan, from the New Zealand, from Australia, and you can guess it, then it's nice to trade the JPY or the Australian dollar or the New Zealand dollar, because in those times, those pairs, those currencies move the most. So make it easy for yourself, check for yourself, where can I trade, where am I from, and what times can I trade, and then combine it with the pairs you would want to trade. So if you are able to trade London session, go for euro, go for GBP, compared for example with the US dollar. So trade euro dollar, GBP dollar, and also euro GBP. So aside from trading the top 6 biggest pairs and also knowing what time you best can trade those pairs, the third framework you can use for the question what pair should you trade is the currency strength. So when you are doing your analysis, look for weak and strong currencies. and try to trade a pair that has both a strong and a weak currency in it for the most clean moves. Now, what I mean by that, if you, for example, have the euro and the dollar, and the euro is very strong, very bullish, so it goes up a lot, and the dollar is very bearish, it goes down a lot. That is super nice because the euro dollar will then go up like crazy, and you can have nice, clean, big moves, so you can make lots of money. And if you, for example, choose two weak currencies, so for example, both the euro and the dollar are both weak, then you have that same result as you had in that previous slide. Like here, when you have two pairs that go the same way, then you have sideways movement. You don't want sideways movement. You want big trending moves up or big trending moves down. So look at the individual currency strength. And a few pointers. These are not all, but these are the 4 important ones. These are 4 very important ones that I use in my own trading as well. Are economic data. How is it with the inflation? Like, what's the status of the inflation? How is the unemployment? How is the GDP? Look for political stability or instability that can have an effect on its currency. Look at the rates, the interest rates. And when, for example, the rates are very high of a currency, then it's a very strong currency. And when the news comes out that the central banks want to cut rates, so they want to lower the rates, that will give a weaker signal to the currency. So if you, for example, have a euro that has risen its rates, so it's going up, this is a strong currency, and then the news comes out that the Federal Reserve, so the US central bank, is going to cut rates, then you have a strong euro and a weak US dollar, and you can anticipate higher prices for euro US dollar. And also you can keep in mind the black swan events, the unexpected ones, like for example COVID a few years ago, and use this in your favor. And then lastly, some other liquid asset classes you can trade. You can trade the metals, so gold, silver, also copper. I like to trade only gold and silver. You can look at oil, also very nice to trade. Since a few years, you can also trade crypto, and especially Bitcoin and Ethereum. Those are the biggest, so that means the most liquid. Remember earlier in this video when I talked about the majors, those are the big ones, the ones with the most liquidity, the most volatility, and so the cleanest moves. The same is for crypto. When you trade Bitcoin and Ethereum compared to like a random meme coin or a small cap, that just doesn't trade the same. So if you trade crypto, focus on Bitcoin, Ethereum, and you can also trade index futures. And index futures are the stock markets. So the Nasdaq, the US 100, the S&P 500. You can trade the Dow Jones, it's the US 30. You can also trade the German, the DAX, the English one, the FTSE, the Nikkei, that's the Japanese stock exchange. And you can do that in the form of index futures. In this beginner bootcamp, we're not going in depth into this, but know that next to the Forex pairs, you can also trade other liquid classes like these 4 types. And now let's dive into TradingView to see both the Forex pairs, but also this other liquid asset classes are looking like on the charts themselves. So currently you're looking at TradingView. This is the tool I use to do my analysis on. And on the right side, you see every single Forex pair and other asset class I am trading. So here I have the currencies. So DXY is the dollar, the JPY basket is the Japanese yen, the BXY is the British pound, Australian dollar, Canadian dollar, euro, New Zealand dollar, Swiss franc. These are bonds. This is something for later, it's not for the beginner bootcamp. And I have these for my analysis for when I'm looking at my individual currency strength. So then I just go, for example, here to the dollar, and I see this individual currency is currently, at the time of this recording, it's July 24. It's kind of weak for the last few days. So I know if I find a nice strong currency paired with it, so for example, the euro is very strong. We can take a look at that right now. Yeah, the last few days, the euro have been very strong. And you know, when you have a weak dollar, euro is the base pair. Euro is the base currency. Dollar is the quote currency. So you know, euro dollar is then going upwards. And if we go to euro US dollar right now, it should be that the last few days, based on the things you just learned, euro US dollar should have gone up. And here you go. You have a weak dollar, strong euro, and see how clean and fast this move upwards is. These are the currencies, the indices, and indices were the index futures. So if you want to trade the Nasdaq, this is the futures contract from Nasdaq. ES is the S&P 500. You see here in the small, you see the little logos, 500, 100. The US 30 is the Dow Jones. I also trade the FTSE, that's the UK 100. And of course, you also can trade the DAX, that's the German, I think the German 40. You can trade the Nikkei, that's the Japanese one. And here you have the majors, Euro US dollar, GU, AU, NZD US dollar, the minors and exotics, the yen pairs. And here you have the metals. So for example, here gold is called XAU, XAU. So this is currently what gold looks like. Silver is XAG and oil is CL1. And TradingView, you can just search oil, for example, oil futures, last kind of skip. And here it is oil, CL1. You can also type in crude oil and you find it as well. Just go here in the search bar or here in the search bar and type oil and you'll find the one you need. And lastly, crypto. Here here, Bitcoin has been going down. You can trade Ethereum, you can trade Solana. I like to only use Bitcoin, Ethereum, and Solana for now. At the time of recording, these are the biggest three. Maybe when you watch this, there are some different cryptocurrency that are very big and you can trade them. I like to only do Bitcoin and Ethereum and maybe some like Solana. So this is how it looks like. And from this baseline, I'm doing my analysis on a weekly and a daily basis.
If you enjoyed this video, I'm sure you will enjoy 2024 and 2025 mentorship here on this channel. I notice only 20% of you watching subscribe to this channel. And if I could ask you for a small favor, if you like this channel and you like the value you receive here and want to support me, the free and simple way to do this is hit the subscribe button. And my commitment to you is if you do that, I will do everything in my power to ensure that every new video will be better than the previous one. Thank you so much, and I'll see you in the next one.